What's going on YouTube? Jake Unfiltered here. Today I'm talking about oil stocks and are they a buy, are they a sell, are they going to tank, or are they going to go up? Alright, so what I always think is that you should invest in index funds, or that I should invest in index funds and max your tax advantage accounts before you start throwing all your money into stocks, because a stock can go to 1,000 or it could go to 0. Okay, so I mean, buying stocks are risky. However, buying long-standing companies are less risky than buying unprofitable momentum stocks. Okay, so you got to keep watch for those ones. Now, these oil stocks and stuff, they're different, and you could buy oil ETFs, and you can just invest into oil stocks, right? So there's a couple oil stocks that I was looking into, and literally two oil stocks. So one is ExxonMobile, and then one is Chevron. All right. So ExxonMobile. So both of these oil stocks shot up since December, the year to date. Year to date, ExxonMobile is up 26%, and year to date, Chevron is up 16.39%. Now, ExxonMobil didn't rise as fast in the last year to date since then ExxonMobil did, but both have gone up since, around, let's see, around September. Oil stocks have been doing better. So I'm thinking, commodities are a pretty good investment right now with all this inflation. I think that commodities are good because, everybody needs oil, and whenever you buy momentum stocks or speculative stocks that you think might make money in the future but they're unprofitable right now, those are the stocks that are going to fail during times of high inflation. Stocks that are going to win during times of high inflation are oil stocks, commodities, things that you absolutely need, like oil and, tattooed chef. You gotta have tattooed chef during times of crisis. Just kidding. I wouldn't recommend that, but you can do whatever you want. Alright, and then there are oil ETFs. Wow. I looked up this oil ETF called USO, the ticker symbol, and it is not doing very well. However, in the last year, it's up 77%, but the life of the fund is down 12%. So if you look back in 2008, this ran up from $411 to $800, or $900 to $1,000 in 2008, and then it tanked all the way down to $40 to $60, right? So I don't think I would recommend this commodity ETF. Like this ETF looks like it's not doing very well. It looks like it's one of these ETFs that people short, and people just get screwed if you buy into it, right? So I'm gonna look past USO because I don't think that is a very good ETF. Unless I'm wrong, maybe it's a really good ETF and you won't lose all your money, you'll just lose some of it. Okay? So it's looking like a trend here that oil ETFs are going down in value. I'm thinking it might be because, oil's getting cheaper, and just like USO, the DBO, Investco DBO oil fund, that's the ticker symbol, is DBO. It's a commodity ETF, it's an oil fund, and it seems to have the same exact trend as the USO ETF. However, the last 5 years has been better than, this fund performs a lot better than USO. It has a 0.75 expense ratio. That's pretty high to lose all your money. But, yeah, so I'm thinking that, back in the day, oil used to be worth a lot more than it is today. But it seems like the trend's going back up. Okay? I don't know if it's going to go all the way back up to here, to this area, down in 2008. But there does seem to be a crisis on our hands right now. Now, I don't know, man. I don't know, actually. I'm thinking that oil might not be the best thing to invest in. But that's up to you to decide, right? So, ExxonMobil is a company, and it seems that from the beginning, it's been doing really well. All right, it's up 2,000% from the beginning, and it's not doing as bad as the ETFs. However, it is down a lot, but it's I think it's a pretty good company, and they make a lot of money. Okay, so their fourth quarter in December 2021, they had a revenue of $84 billion and $8 billion net income, or almost $9 billion net income, and they had a net profit margin of 10%. That's a pretty good profit margin, and I think that they do make a lot of money. I don't know why their stock doesn't perform well, because the stock price goes with the price of oil. So I'm thinking a barrel of oil is around $93 today. Now Peter Schiff and some other people that are talking about how the price of oil might go up to $300 a barrel. Now these guys, they're like catastrophists. They catastrophize everything. Like, I swear, Peter Schiff wants the market to crash. Like, he's all about gold, and if the market crashes and then there's high inflation, gold's going to go up in value, because gold goes up when the economy goes down, because everybody's like buying gold because it can protect your money, and it's a nice little rock or metal, and it's very pretty, and it is used in electronics and stuff. However, the year high of oil was $93, and the price right now is $85. So is it gonna go to $300 a barrel? I mean, that's a little high. I feel like it could hit $100, maybe 110, or it could go back down. I don't know, but the economy is doing terrible right now. It just depends. See, I just feel like oil stocks are kind of a risky investment unless you're willing to hold these oil stocks forever. You're gonna have to hold them for like 10 years, and maybe if it goes up to an all-time high, I would probably sell out of it, because you see it's pretty volatile, and you might lose some money if you keep holding, or especially if you buy at the top. And right now, buying oil stocks is a trend because commodities are going up. So let's see what they got to say about it. While the shares are not expensive, they aren't the bargain they were early 2021, and are back to where they historically traded in 2018 or 2018. This is Exxon. Shares currently trade for 13 times next year's earnings estimate of $6.21 per share. Those estimates have risen sharply since the beginning of January from $5.59. Despite the rise in estimates, earnings for 2023 are expected to be lower than $6.57. The company is forecast to earn in 2022. So they're earning about $6.57 per share. Now, I looked up the fair value of ExxonMobile, and they're saying that the fair value is about $92. And then these people over here are saying it's modestly overvalued. So, I mean, you take that shit with a grain of salt. While prices of oil may continue to rise, current prices are hitting up against a resistance level based on bearish broadening wedge pattern. Additionally, prices have been rising steadily along with an uptrend, and once that trend breaks, we could see a reversal lower back towards $70. The relative strength index for oil shows that the commodity is very overbought right now, with a reading of over 70. Exxon's chart suggests that recent rally may be over after it broke, crossing above $68. The breakout is now equal to 100% of the October 2020 to March 2021 rally. This can be significant technical relationship that can act as a resistance. Additionally, a solid horizontal resistant level going back to the summer of 2019 is around $83. Finally, the relative strength index is now at 81. The highest overbought reading since 2012. A pullback in Exxon likely takes the stock back to 72. I mean, this is what I see. Okay, when I see a stock shoot up like this and just like go to the moon, if it goes to the moon, it's likely to come back down to earth. You know, it could rally some more, but it could tank as well. After looking into it more, I'm thinking that it might not be the best investment to protect your wealth. Now, if you were Chevron, you'd be rich. You know, they make money no matter what. Now, if you're invested in them, you might not make as much money. So, Goldman Sachs analysts said they expect Brent crude oil to top $100 per barrel in the third quarter of 2022 and could be up to $105 within the first 3 months of 2023, according to their projections. So, not everybody is thinking that oil is going to go back down. You know, everybody has a different opinion on the price of oil. Oil could be either, you don't know what's going to happen. U.S. oil companies, including ExxonMobile and Chevron, intend to start additional oil rigs, but the crude produced would not be available until early next year. I mean, if oil goes up in price, then it goes up in price. You know, it's already like $3 in some sense. Right where I'm at, it's $3.59 a gallon, which is pretty expensive. It cost me like $50 to fill up my car. So oil could keep going up, or it could keep going down. All right, J.P. Morgan, oil could easily hit $120 a barrel if Russia-Ukraine tensions escalate. Oil prices rose late on Wednesday afternoon, with Brent reaching just shy of 92 per barrel, but JP Morgan is warning that Brent crude could easily reach 120 per barrel if the geopolitical conditions between Russia and Ukraine deteriorate. The price spike, which JP Morgan is warning would likely come as a result of disrupted oil flows from Russia should the U.S. sanction it for hostile activities in Ukraine. The warning may seem at first glance like a bold or even reckless prediction. However, Russia remains one of the top 3 oil producers in the world, producing roughly 11 million barrels of crude oil per day. Of that, approximately half is exported, the majority of which makes its way to China. China, however, has a history of purchasing crude oil from sanctioned nations such as Iran and Venezuela. But even if Russian exports were just cut in half, oil prices could skyrocket to $150, said in a note this week. Oh my god, dude, that would be insane. $150 a barrel? Dude, ExxonMobile, Chevron, their stocks would just freaking shoot up like 100%. So, like, all these stock investors for like ExxonMobil and Chevron and oil, like they are all hoping that, I bet they're all hoping that like this oil goes up to $150 a barrel, or you know what I'm saying, like they hope for these negative things that will help oil like stocks go up, and then they'll make millions and billions of dollars, and then they don't even have to care. They don't want to even care anymore about how expensive gas is because they just made it like a boatload of money off of these like oil companies, you know. For the Biden administration, choosing between sanctioned Russia oil exports and keeping retail gasoline prices at American pumps from reaching the stratosphere seems like a no-win scenario. Gasoline prices are already higher than the administration American consumers would like. As midterms loom, the ruling party will likely do everything when it's within its power to lower, not raise, these prices at the pump. While this would be devastating for both the Biden administration and American consumer, it would be equally taxing on Russia, which relies a great deal on crude oil revenue for its budget. Last year, the value of Russia's crude oil exports totaled more than $300 million per day. Wow, that is a lot of money. And you know, just like all this stuff going on is just like horrible, man. Like, why are we getting involved in Ukraine? Like, I don't freaking understand all this. Like, why are we like jumping into these like war things? Like, does every president like want to be known for having a war or doing something horrible? Like, I swear to God, Trump is the only president that didn't start a new war within the last 20 years. You know, like, let's just like keep to ourselves. Let's be peaceful. Try to undivide the country, but the government wants us divided because it helps them win the election. If everybody came together, we wouldn't be fighting against each other, and who would we look at to fight? Like, we'd probably look at the government and be like, yo, y'all are screwing us, but we're too busy fighting amongst ourselves, so whatever. That's just how it goes. So would I say that oil stocks or oil ETFs are a buy? Personally, I don't care what you do. I personally don't want to get any oil stocks now after researching into it. However, they do have good quarters. They do make a lot of money. Like, these companies are doing really good. I don't know why they drop with the price of oil, because they're still making a lot of money. I don't see why investors don't want to invest in a company that makes a bunch of money. But it seems like the ExxonMobile and Chevron, they follow the price of the oil, the barrel of oil, So it's not really in my best interest to want to bet on the price of oil. I would prefer to just invest into a company that's making profits and growing every year, like something like Google or Apple, compared to something like Chevron and ExxonMobile. However, I mean, there's so many predictions going on for the stock market that big tech's going to crash. The stock market is a bubble, and gold's going to go to $5,000, or gold's going to become worthless because we find an asteroid that has trillions of dollars worth of gold on it, and then it gets devalued because it's not actually worth that anymore if we bring it to Earth, because there's a limited supply of gold. There's a lot of predictions, right? And then Peter Schiff, he's the king of predictions. He's saying that oil's going to $300 a barrel, gold's going to go to $5,000 an ounce, and a whole lot of other things. Like, inflation's going to be worse in 2022 than it was in 2021. They read the CPI differently. Hey, man. Well, that's all I have for today. Subscribe if you enjoyed the video. I mean, anything could happen in the oil market, I mean, it's just something that you gotta, look into. Is it the right investment for you? I recommend just getting the whole stock market. Well, I don't want to recommend anything. It's just, I personally would rather just invest in the whole stock market. The World, International, US, VT. VT is a good company, or you can get VTI and then VXUS. But you could, if you get VU and VXUS, you can choose the amount of international you want exposed to and choose the amount of US you want exposed to. Have a good night. Don't forget to like and subscribe. Hit the like button. Ring the notification bell. Enjoy your night, your day, whatever. Have an awesome day. Thanks for watching.